Good morning and welcome to the ADS Securities Markets Update. Today we will discuss many subjects including the Reserve Bank of New Zealand rate cut, the US economic releases yesterday, gold, China and the US dollar trend against most of or some of the major currencies. But beginning with the Reserve Bank of New Zealand, the bank basically cuts the OCR rate by 25 basis points as expected or as widely expected toward 3%. Despite that, the New Zealand dollar soared across the board due to two factors. The first factor is that the rate cut was already priced in the market a few weeks ago. In addition to that, the second factor is basically that the bank removed the warning of unjustified in New Zealand dollar. However, the bank repeated that more rate cut is likely and more New Zealand dollar depreciation is necessary for a balanced growth. The New Zealand dollar the Kiwi against the dollar followed our estimates noted in our post decision report, reaching out also our potential target back then towards 66.65 and continued to rise towards 67.95 or 66.95. And basically this is yesterday's high, and yesterday's high represents the upper line of the downward channel as shown on the chart here. And in addition to that, we sent this chart yesterday's morning warning all the bulls that the spike might be over, and a few hours later or a few hours after that, we've seen the New Zealand dollar also decline back after the US figures also, and also during the Asian session because of the US or because of the New Zealand or the Asian also figures, which basically led to another decline back toward 65.70s this morning. In the meantime, traders needs to watch for 65.70, which basically represents its 61.8% Fibonacci retracement from the recent rally or from yesterday's rally, which basically a break below that level might clear the way for further declines ahead. However, otherwise another rally could be seen toward or to retest that trend line again in the next few hours. During the Asian session also today, the New Zealand trade balance came in with a surprise, with a surprise deficit of 60 million in June, and this is basically despite the fact that estimates were also this is the trade balance, New Zealand trade balance came in with a surplus of a deficit of 60 million after a surprise, or in June after a surplus of 371 million in May, while it had been anticipated to narrow toward 100 million only. And this is the first trade deficit after 5 months of consecutive surpluses, and this was also another catalyst for a sell-off in Kiwi. The US dollar also traded lower during the early morning hours yesterday also after testing 61.8 retracement on the 4-hour chart basically the day before, and the decline continued with a clear breakthrough 79.10 support area. This was basically yesterday, and this is the 79.10, and break below that level with the close. And then we've seen unfortunately another rally during the US session or right after the US figures, which basically we had the US dollars claims which came in much better than expected, in addition also to the continuing claims which led to a notable rally rebounding above 97.10. Like in the meantime or for today, the outlook for the US dollar index remains negative as long as the 97.44 remains intact for today, which represents its 61.8% from yesterday's decline from yesterday's wave. And a break above that resistance clears the way for further upside or further gains above 97.80, which would be at the invalidation level for any short positions on the US dollar. Despite yesterday's figures, we maintain our neutral outlook towards September's rate hike as we wait for more evidences. In China, more and more economic figures came in with more surprises today, and basically this will increase the chances for more interventions by the People's Bank of China, which may start also this weekend. During the Asian session, the manufacturing PMI in China unexpectedly declined back to 48.2 in July, down from 49.4 in June, despite the fact that estimates were to recover or to continue to recover further toward 49.7, and this is the lowest reading since April of 2014. These figures were led to a notable sell-off in both Aussie and gold during the Asian session, but beginning with the Aussie, the pair also continued to failed to sustain yesterday's gain, closing the day with a bearish shooting star on the daily chart. And this also, and the catalyst for further declines was the Chinese data, and the current breakout also suggests a continuous decline in the next few hours as long as 73.60 resistance area remains intact. Gold also declined sharply during the US session yesterday and also during the Asian session today after the Chinese figure, reaching as low as 10.77 before recovering slightly this morning toward 10.83. In the meantime, the key support remains the 10.87, 1084, which basically a daily, weekly, or a monthly close below that support may clear the way for further declines below $1,000, because these levels, or this level, basically represents the 61 or the 50 and the 61% retracement on the long-term chart, which basically we're talking about a 12-year or the 12-year bull market. This is the 1087. This is the 50%. So a break or a weekly or monthly close, especially a monthly close below that level, would clear the way toward 891s. Finally, the British pound failed to break above its 56.70s resistance area yesterday. Unfortunately, we had a triple top yesterday. This is due to the retail sales figures, which came in with a disappointing reading. However, we believe that July's data should come in with a notable recovery. In the meantime, the pair is ready or already retraced by 50% from the recent rally since also the 8th of July, and a retest from or another decline could be seen toward 54.62, which basically also represents a 61.8 retracement as shown on the chart and as shown before on the chart. But however, the uptrend before the uptrend resumed, but the invalidation level for such trade remains at 53.30, which is the lows here. As for today, during the European and the US sessions, we will be focusing on manufacturing and services PMI from all over the Eurozone. In addition to that, we'll be waiting for manufacturing PMI in the US from market, in addition to the new home sales in the US, which may keep the volatility on the rise. This is it for today. You can follow us on our social media sites, Twitter, Facebook, and YouTube to get the latest economic releases, reports, and analysis. Thank you for watching. Have a good weekend. I'll see you once again next week.